in a view on the metal space as well. We have Rahul Jain joining in. Rahul, there are base metals which are rallying this morning, but at the same time, there is a fair amount of concern around what took place. The Supreme Court saying that there could be retrospective royalty which will be charged by states over the last few years itself, and that took Tata Steel down in Friday's trading session. What are your thoughts on the space right now? What should one be looking at?
So on the metal side, steel is under slight pressure. We've seen price cuts happening right from March, and the price this quarter also we've seen about 1,000-1,500 rupees kind of cut, which is ongoing. Now coming on the Supreme Court deferring, there is expectation that the government may come out with a kind of a bill to defer this kind of payments, because cost will go up quite dramatically, especially for captive miners. For example, NMDC categorically stated that they will pass on whatever increase they've had to their customers. So for the steel companies, especially, the issue is quite serious, and there's expectation of some kind of leeway that they can get in future, but it's all speculative right now. And plus, you have a weak pricing environment right now. For non-ferrous players, the ruling isn't as impactful, especially because the cost element on the mining to the end metal product isn't a lot. So inside the value addition is very high, so the cost impact isn't very much. The steel companies definitely will have to rework their strategy, and plus you don't have a pricing environment which is supportive currently. They have a global, especially in China, the steel production hasn't been cutting off, but the demand is off. So their exports have gone up quite sharply, which is, hurting the domestic steel producers. And domestic producers haven't been proactive in cutting prices because obviously for them, the cost inflation is high, and they've announced very large capacity increases. So they have to balance between, profitability as well as the capex which they're doing. So
sure.
yeah, so that is the slight issue.
So Rahul, yeah, exactly. Coming to the global picture, not just demand supply, to try and understand that for both ferrous and non-ferrous. Staying with ferrous, I mean, what you just said, this demand concern out of China, because we all know that no matter what stimulus measures they provide, the property market still seems to be in the doldrums. And I was reading that apparently the domestic steel consumption in China is a quarter of what it used to be at the peak. And therefore the higher exports that you're referring to. So given that context, what are we expecting in terms of the demand supply trends here in India? I mean, to what extent?
Actually, the demand is not an issue at all. Like if you see, most projections are between 8 and 12% growth. But thing is that the pricing is determined on the marginal producer. So Chinese, they're kind of, selling at cost or below cost, which is really, despite the fact that India iron ore is captive for a lot of players, and there is a huge pricing difference in terms of the landed price of iron ore and the prices what the steel players pay for. But despite that, the margins are under significant pressure, and with the price coming off recently, we could see quite weak numbers in Q2. Typically, second half is much better, but again, it is subject to a lot of conditions. In some Chinese, the export slowdown, and there's a anti-dumping duty probe which has started against Vietnam and things like that. The iron ore producers especially haven't cut prices in India. So I was just checking for NMDC, we could see another 20% kind of a price cut which they should do based on historic pricing parity. So there is cost which is not coming down as fast, but the end product.
Rahul,
prices.
what's the compression in margins? Could you just quantify that? I mean, at least Q2, the here and now, what is the kind of compression in spreads that we are looking at potentially for domestic steel manufacturers?
So on average, about $20-25 lower than the first quarter. So that is the general number, because coking coal, what happens is the number varies from company to company depending upon when they have booked the coal, the imported coal. Prices for coking coal also have come down, but there is generally a lag. So typically you need to keep 1 month inventory with you, so you cannot really adjust cost very fast. And second half is generally better for the industry in terms of volumes. Now pricing is we'll have to see in terms of how things shape up in China and global factors, but it looks tough for any price increases to happen in the near term.
Okay, and that we should put that line out. NMDC 20% price cut.
So if you see the historic parity has been about 60% discount to international prices. Currently, they're at about 45%. So just taking that, so around 1,000 rupee cut should happen in the next, 1 or 2 months, depending upon when they revise, when they meet, and things like that. So in case of non-ferrous, the situation is far better.
I'll just come to non-ferrous. I'll just come to non-ferrous in a bit. I want to, for our viewers, right, the new thing, what we want to address, and the graphics will come up on your screen. So I hope I'm pronouncing this right. China Bao Steel Group Corporation. Rahul, you must have read this. So the chairman of the company, and they, by the way, produce about 7% of global steel. They said that the crisis, they're calling the crisis, will likely be longer and more difficult to endure than we expected. In the process of crossing the long and harsh winter, cash is more important than profit. This is coming in from the chairman of one of the large steel companies in China. So two. Go on. Sorry. So go on, Rahul. You want to say something?
So if you see the historic pattern of how economies evolve, China is kind of way past its, the per capita that you expect.
No, I get that. Let me ask the question. Will we see duties going up here? Will we need that? I mean, if this is a prolonged situation and they're going to sort of ship out stuff because the consumption there is low, will duties need to go up here in India for protection purposes? How urgent is the need?
These duties have been introduced in the past, so it's not like a one-time, first time it's happening. Think that, it's quite ironic that the cost curve is quite low in India, but we're still not able to price the steel competitively. And which is also because the cash requirement is very huge for these companies. So if you see, we will add 25 million tons of capacity this year. And 20 years back, our annual production was only 30 million tons. So the scale of cash requirement is quite huge. So to balance these considerations, the government made adding tax, which I think is a temporary measure.
So this is not exactly a conducive environment to go long steel stocks, right, Rahul? Briefly.
So see, they have had a great last 3 years, obviously. So you could have a pause for a while. And so depending the pricing, the spot pricing plays a lot of crucial role in terms of how stock prices will be in the short term. And so structurally, overall, globally there is a overhead. So you cannot expect these stocks to deliver very massively from here. But you will have stories where a lot of the smaller names are where.
That's true. That's true. In 30 seconds, in non-ferrous, what do you like? You say the situation there is much better.
Yeah, non-ferrous, the cost structures and everything are very conducive. For example, aluminum, they have their own, a lot of the companies have own alumina, own bauxite. A lot of them are getting more their own coal as well. So the cost curve is in the top decile. So that actually really is very profitable at this point of time. Vedanta, Hindalco, both are looking very good. In fact, Hindalco for the first time after a very long time is looking to add capacities in India on the smelting side, on the refining side, which is very positive. So I think both these companies are, and we have only two real large non-ferrous players. Both of them are very good, actually.
All right, Vedanta and Hindalco both looking good. Rahul, a quick conversation today. Thank you for your time. Good perspective. Appreciate it here on CNBC. Sudarshan is